Hi, welcome everyone to the latest in our series of webinars on topical issues for our clients in the insurance market. I'm Martin Mankabadi and I'm the Global Chair of the Dentons Insurance Group. It's great to have so many of you online. Thank you for joining us. We've got a number of other webinars in the pipeline on other areas of interest such as sustainability and ESG, cyber risk, and InsurTech. However, we're very much open to suggestions for other topics, so please do let us know what you'd like to hear about. Today, though, we've got a great panel and we're going to be looking at sanctions. And this is an increasingly complex area for the insurance market, which in turn means that there's an increased risk of breach, and as a result, an increased need for businesses to have the right systems and controls in place to properly manage this risk. Now, before we get started, and you hear from our panelists and they introduce themselves, here are some housekeeping points. You were sent some presentation materials yesterday, but let us know if you can't access them or if you can't track them down. All lines are muted, but you can actually post questions in the Q&A box. And I know that our panelists are keeping an eye out for any questions that you may ask. And finally, some of you might be interested in learning about CLE credit. I'm sure you're not here just for that, but if you are interested in CLE credit, please keep the webinar window open and at the front of your screen, in particular, if you're after New York or New Jersey credit, as you'll need to enter a code word at some point during the presentation. So at a certain point in the presentation, our presenters will state the code word and a slide will show the code word. Please then enter that word in the chat box at that time, and credit for our webinars pending approval in California, Illinois, as well as New York and New Jersey. I'm going to hand over to our panelists now. Hope you enjoy the session on sanctions. Thank you.
So we're just going. Thank you, Martin. We're just going to do a round of introductions before we dive in. So my name is Roger Matthews. I'm a partner in the international trade practice in London. I specialize in particular in sanctions and export controls. And prior to returning to private practice some years ago, I spent some time both in the European Commission sanctions unit and in the sanctions unit of the Treasury in what was then the asset freezing unit, and has, after several permutations, morphed into what has now become OSCE. Nadia.
Thank you, Roger. Hello, everyone. My name is Nadia Nichai, and I'm a partner in the Brussels office of Dentons, and I'm working with the international trade practice here out of the capital of the European Union. Delighted to be here with you and with my amazing colleagues. Over to you, Peter. Thanks.
Well, thank you, Roger and Nadia and Morag. It's great to be with you, and it's great to be with so many friends and clients today. My name's Peter Feldman, and I'm a partner in Dentons' Washington, D.C. office. And I help clients here in the U.S., but really all around the world, comply with U.S. sanctions and export controls across the whole life cycle of their business. Morag?
Everybody, I'm Morag Gilliland. I'm the Chief Compliance Officer at Allied World Insurance, and I have been there for about 50 years, 70 overall in the insurance space. Around 10 years, so have had a lot of exposure to various sanctions issues and practices.
Great. Thank you all, and thank you particularly Morag for coming and bringing an in-house perspective as well as our perspectives from the various geographical locations. Morag, I should say I had a little bit of trouble hearing you then, so if you can just keep quite close to the microphone, I think that would help. So we've got about an hour to do justice to what's quite a broad topic today, to look at sanctions as they impact on insurance across EU, UK, and US. In order to try and get the most from this session, we've enclosed a slide pack which sets out in quite a lot of detail the key features of US, EU, and UK sanctions, including the core concepts and some more detail on some of the key sanctions regimes. We're not going to run through the whole of that deck in this hour, but please do come back to us on any aspect of it if you have any questions arising from it. So instead, we're actually going to use the time in this session to have a discussion between ourselves, talk through some of the key aspects of the sanctions that arise specifically in the context of insurance. And with that in mind, it's great that we've got Morag with us. Morag, as you just heard, is Chief Compliance Officer at Allied World, and so that gives a real in-house flavour as well as the geographical perspectives in looking at how sanctions apply for insurers. And I should flag this is true for all of us, that all of the views we express are our own. But I should particularly say for Morag that she can't give detail specifically about the approach or the decisions that Allied World has taken to particular issues. But so we'll keep this at a relatively high level, but please keep that in mind. In terms of who's on this call, we have insurers, we have reinsurers, I believe we have some insurance brokers and others in related roles. So we may refer to insurance or to insurers as shorthand, but really we're interested in issues affecting the whole industry and the range of operators within it. So if you have questions, please do indicate your perspective, and we're happy to hear from all angles of the industry. And you will know, of course, that insurance covers a wide range of businesses, covering different sectors, business models, and the issues facing each will vary considerably, which inevitably means that today's session is high level. But again, we're always happy to go into detail and questions. And just before diving into the discussion, it's worth a moment to recall why insurers are particularly exposed to sanctions compliance risk. Typically, I think one tends to think of banks as being at the coalface of sanctions compliance. And if you look at the enforcement actions, there have certainly been a lot against banks. But as those on this call will know, insurers cover a vast range of activities, handle very significant amounts of business, and sanctions policymakers and sanctions authorities are well aware of this and well understand how insurance as well as banking is central, and they see insurers just like banks essentially as gatekeepers to the effectiveness of sanctions. And the mentality in the policy making and policymakers and authorities is very much that if sanctions can impact on the gatekeepers, the banks and insurers, and probably put asset managers in that category as well, then that is going to effectively advance the policy that the sanctions are aiming to deliver and impact on the real targets, albeit less directly. So with all of that said, just one final point: you have a chat box on your portal. Please do use it. Please feel free to ask questions. We'll aim to pick them up if we can along the way. We'll try and leave some time for questions at the end. But in any case, if we don't get to any questions you have, do feel free to come to us afterwards, and we'll try and respond offline. So we're going to start, I think, with a look at jurisdiction. So if I can just involve the panelists. There's been an increasing divergence of sanctions in recent years, including between the US, but also more widely. And of course, now we've got the UK on stream as a separate sanctions jurisdiction outside the EU to add to the picture. And I think if we could start off just by looking a little at how insurers are typically dealing with this. So are we seeing insurers taking a catch-all approach, aiming to comply sort of with the highest common denominator of restrictions across the various regimes? Or are we seeing insurers developing a more targeted approach from the different jurisdictions? Morag, I wonder if you might start from your perspective.
Of course, thank you, Roger. I would say that it's mixed. A lot of it kind of depends on the company themselves, the jurisdictions they operate in, and I kind of see that divergence, obviously, it causes extra issues, extra challenges for compliance. So it's how do you navigate which one to go with? A catch-all is brilliant. You've got one set of rules, one list that you're screening against, so it's easy to maybe try and maintain from a process point of view. But then when you look at the kind of practicalities, if you're screening against a list that maybe only one small part of your business has to follow, and you're screening all of your business against that, then you're getting a number of false positives that takes time and resources to go through. So I think it's really important to try and match up the company structure, looking at the regimes that are applicable and the enforcement power of those regimes to decide where to pinpoint yourself in that, so that you're not being inefficient with your resources, but you're not missing things, I guess. So it's a real balance to try and navigate your way through that divergence.
Peter and Nadir, I wonder if do you see a difference between how insurers are responding to this tension as against other types of financial institution?
Peter, would you like me to go first?
Sure, go ahead, please.
Thank you. Well, I think in general terms, I wholeheartedly agree with your comment, Roger, at the very beginning. I think it's true that one seems to get an impression that companies operating in the insurance sector would rely on the financial institutions, bigger financial institutions, banks notably, to conduct the due diligence. But from the EU sanctions perspective, the crux of the matter has always been for EU businesses to deploy a risk-based approach, which requires them to look at the specific transactions and look at the nature of their risk profile, the business where they're present. And all of these components have to dictate the compliance choices European operators need to make. And sometimes that does mean over-compliance, and sometimes it does mean catch-all approach. Long and the short of it is sometimes one has to be very pragmatic, because you cannot comply with everything and be completely bulletproof. So I think there has to be a reality check each time you decide to, include a new list into the screening tool or decide to comply with an extra body of laws. Over to you, Peter.
Well, thanks, Nadia and Morag, and I agree with the points you've raised. I mean, I think as I see it, my perspective is that if there's one thing that we can all agree on, it's that there is no one-size-fits-all approach here, because that doesn't work. It's not practical. It's not commercial. Frankly, it's probably not even economically feasible just to write off all business that might potentially expose an enterprise to some degree of risk somewhere. And so what I think we've seen is, especially given the incredible rise, incredible diversification, sophistication, and enforcement of sanctions over these last, really call it 10, 11 years, we've seen particularly the insurance markets try to figure out, okay, how do we balance the need to be able to continue to do business, the need to be reliable? I mean, that's sort of the fundamental bargain of insurance, right? With the need to be compliant, which is the other half of that bargain. And the need to protect the company. And so I think what we've seen is over the years, and I know we'll talk about this a little bit later, that there's been an evolution in terms of approach, that evolution has essentially mapped the diversification and sophistication of sanctions regimes to a diverse and sophisticated set of compliance approaches and practices. And just as Morag very rightly mentioned, what's right for one part of the business may not be what's right or required for the rest of the business. And I think the same holds true across companies.
Mm-hmm. Thanks. And that one thing actually that relates to, all of that discussion as to whether you choose to go for a catch-all or for a more diversified approach does assume that at least within reason, you can identify which jurisdictions a particular activity or a particular line of business applies to. And one thing I wanted to pick up in particular with Nadir and Peter was how clearly defined the jurisdictional reach of US, EU, UK sanctions are. And if I can just start off on that with a bit of a look at the UK side. Of course, the UK sanctions regime is very new. In broad terms, it's a bit like the EU sanctions still, but it's not identical anymore. It's got its own wording. And I noticed just in preparing for this seminar, we've had a change in the scope of the UK sanctions nexus just between January the 1st and now. So there was the UK sanctions nexus is defined in the legislation and amplified in some provisions in the guidance. And the guidance, as on the 1st of January, used to have a sentence that said, we will not artificially bring something within scope of a UK authority that does not naturally come under it. Well, that sentence in the April version of the UK guidance has disappeared. So I don't know if that indicates that even without the law changing between the 1st of April and now, the scope of UK sanctions has changed, or the jurisdictional reach. And I give that just as an example of how these entities could be quite fluid. In the US, I think, Peter, you'd probably agree that we're sometimes a little surprised by OFAC's view as to where the jurisdictional reach is. So I wondered if you had any thoughts on how well defined these concepts really are anyway.
Yeah, I think Roger, I've been reading a lot about this idea of a global Britain, and maybe this is part of it. to promote imports into the UK of sanctionable activity and perhaps exports and penalties out. But you know, it's a really interesting question because from a U.S. law perspective, what we've seen again over this last 10, 11 years is the extension of sanctions that had once been sort of relatively static and, dare I even say, not particularly exciting, to something much more than that. So we've, in the last 10, 11 years, gone from, you know, some sort of timeless concepts of a U.S. person or a person subject to U.S. jurisdiction, American citizens like me, people who hold U.S. and other country citizenship, any of you when you happen to be here, once hopefully you're able to come here again soon. We've gone from that to a world in which we've got secondary sanctions, which don't quite assert jurisdiction, but do certainly assert an ability to impose penalties on, frankly, anyone, anywhere in the world, even if their conduct doesn't have a U.S. nexus. We've gone to a much more aggressive posture with respect to treating use and access to the U.S. financial system as a basis for sanctions and sanctions penalties. And so what we've seen, as I think, Roger, you very rightly observed, we've seen a bit of a sort of blurring of the boundaries as between who is required to comply and who is not. And the way the U.S. authorities have blurred those boundaries is by saying, okay, all well and good whether or not you're required to comply, because even if you're not required to comply, you very well may come under the hammer if you don't.
Yeah. And if I may add, actually, one more from the UK side. I mean, there's a reference to how activity that's cleared by a UK institution is subject to UK sanctions, and it was recently clarified that that does not mean that all sterling transactions are subject to or necessarily have a UK nexus, but it does therefore open up the question of how, in a lot of contexts, the parties would necessarily know whether a transaction is likely to be cleared in the UK or not. So, merely to back up the view that it's rather difficult sometimes to know.
So it's interesting, Roger, if I can comment briefly on this as well. So what you've mentioned and what Peter described in his comments is really reminiscent of what I observed happening in the European Union. And that is that the European Union law in this specific respect and otherwise evolves over time. And you can see how the law is being reshaped also by the enforcement actions that are being brought, but also by the implementing practice of the EU member states that impacts how certain provisions get interpreted and applied in practice. And so what's interesting to me in the European Union law about the sort of jurisdictional reach of the matter is that for the most part, the issue of jurisdictional scope seems very straightforward, and the pool of persons to whom EU sanctions apply is common for nearly all EU sanctions regulations, except for one, which you can guess is the blocking statute. It has its own provisions describing what is the pool of who is in the pool of persons that need to comply with EU sanctions, and we'll talk about the blocking statute in a little bit. But if I then dissect the individual conditions that are attached to the EU jurisdiction, of course, similarly to the UK regime, and as is the case with the US regime, it all comes down to the issue of nexus to the European Union, which is this one condition that is phrased in a very articulate way. It's not just about the nexus. This is the nexus. The word nexus is just a shorthand to what the European Union describes as that EU sanctions apply to any legal person, entity, or body in respect of business done in whole or in part within the European Union. So it's not really about, if you will, amorphous nexus. It's really about EU persons doing any part of their business in the EU, which requires almost at times a judgment call, an assessment and knowledge of your transaction from its very conception to the very end. And this criterion, the way it's operating, allows the EU to attach jurisdiction to transactions that can happen wholly outside of the European Union. And so it could be, for instance, by virtue of EU broker being part of the transaction, or EU insurance company or underwriter being an EU person. All of these things sort of informed the decision of having to comply with EU sanctions. And remarkably, with respect to this final criterion number 5 of, you know, being having your business in part or in whole in the European Union, it's interesting also that a quantitative element is not part of this criterion. There is no de minimis threshold. So it can be a very minor element of the transaction to a very big element of transaction. And with this comes a lot of space for interpretation by the competent authorities in the member states, because this is what the European law says. But then when it comes to member states law provisions through which this law is applied and how it's interpreted on case-by-case basis, that becomes a matter of interpretation requiring brokers, insurers, companies to make judgment calls every time they have a transaction at hand.
And I think actually in preparing this here, we put together the scenario, which is, you know, drawn very largely from a couple of real life examples. You know, if we imagine, I think I've taken an example of a Polish aeroplane, which could be a Boeing or it could be an Airbus, and Peter maybe comment on whether it matters. You know, flying perhaps from Poland to India, and it's forced to make an emergency landing in Iran. And as I say, this really is drawn from a similar real life example. You know, maybe insured by a US insurer, perhaps supported by or underwritten by a US reinsurer, and it needs spare parts to be able to take off again from Iran. Where does that leave the various players? You can see immediately there you've got an EU connection, you've got a UK connection, you've got at least one US connection from the reinsurer, and you can very quickly see how these scenarios, you know, trigger all three of the jurisdictions we're looking at here.
Yeah, I think that's exactly right, Roger, and that's not even to get into the export controls pieces of the equation. So you're absolutely right. I mean, when we talk about jurisdiction, particularly in the insurance sector, you also then have a question of sort of who's playing what role. You know, brokers are situated differently than insurers and then reinsurers, and then you've got a question of sort of, well, what's the function? Is the function the initial underwriting? Is the function claims handling? Is the function re-upping a contract? You know, all of these variables are in the mix, and that's why, particularly because insurance, at least from a U.S. perspective, is seen essentially, you know, on par with the banks as a gatekeeping function that enables or disables global trade. These issues are particularly complex, and your ripped from the headlines scenario, Roger, is a very good one. Those kinds of things happen, whether they're in the papers or not, with an incredible degree of frequency that I think would you know, sort of always surprises us. Just how often there's you know X happens to Y.
Yeah. Morag, I wondered, before we leave the question of jurisdiction, just to bring you in on one question. Of course, we're talking today about EU, US, and UK sanctions, and that's very commonly where businesses end up putting the focus of their compliance. But they're not the only jurisdictions that have sanctions regimes. You know, to name a few, certainly Canada, Switzerland, Australia, and many others as well, who run autonomous regimes and from time to time go beyond what the UN requires. How much of how often and to what extent do those other regimes add to the complexity for you?
I think absolutely they add, because it's another set of regulators you have to look at. It's another set of rules and lists and updates that you have to be aware of. So it just adds volume to what you do. Also, for example, some of the jurisdictions we operate in, they'll have a secret list. So they have a confidential list which we can't share with the screening providers. So that puts the onus on the insurers or other companies to do their own screening of some sort in-house. So for some, it might be some kind of a manual process. For others, they maybe have more sophisticated systems that have built something onto the systems. But it's, you know, it's additional resources, additional work. So absolutely, where we have those additional autonomous lists, and you maybe only have a small operation in that jurisdiction, that's where it gets frustrating that there's additional loops, I guess, to jump through. But there's, you know, the return because of the amount of business, it just feels so small. But of course, you have to comply. You just have to. So that's a tricky one.
Yeah, and certainly. And of course, as we've seen recently, it looks like China is expanding its sanctions activity. So we may have yet another one to add to that list. If I can move on now to designated persons, it's a key part of sanctions compliance, and Morag already mentioned that the screening process is part of that. And all of the designated person models, or SDNs for the US audience, basically work on a model of a list of named persons and entities, but with the restrictions applying beyond that, certainly to entities owned by them or owned and controlled in UK and EU speak. Peter, I wonder if I might start with you, but I'd be interested to hear from all of you. How much due diligence and what kind of due diligence is expected of businesses, and how much is it, how difficult a question is it for businesses to really know when they've done enough?
Well, Roger, in a sense, this is the question that everything else sort of turns on the answer to. And depending on, whether it's your morning or your afternoon, you might look at it as very liberating or very confining, in the sense that from a US sanctions perspective, the answer is, well, it depends. The reason why it depends is what we know from the US authorities is that there's no affirmative sanctions obligation that any enterprise has a compliance program, right? There's nothing under US sanctions law that says if you don't have a program, or if you don't have a program that has certain attributes, that's a breach in and of itself. Instead, what we have is a set of guidances from the US which says, look, we encourage everyone to take a risk-based approach to sanctions compliance. And here are some principles for that approach. And then we have, from an enforcement perspective, essentially a set of aggravating and mitigating factors which penalize people for not having a proper program and credit them for having one. So it's within that framework that we have essentially to wrestle with this question of what level of due diligence is enough. And particularly in the insurance space, the question is actually a little bit of a variation on that theme. It's, essentially, do I need to know my customer's customer, or how much of my customer's business do I need to have eyes on? And those issues are really tough. We'll talk a little bit later about, for example, the maritime advisory that the US authorities put out in 2020, because it speaks a little bit about what the US authorities describe as best practices for compliance, particularly with respect to due diligence, among other topics. But sort of the long and the short of it is sort of agnostic to the particular US sanctions program that's in play. Businesses, depending on their sector, depending on their size, depending on their sprawl, can reach very different conclusions about what level of risk is acceptable, about what level of screening is possible, and about how those two things stack up to the commercial realities of not wanting to turn away business you can write, but also not wanting to take on business where the risk, as Morag was rightly noting, where the risk is just totally outsized to the potential return.
Yeah. Nadia, do you think it's more manageable from an EU perspective?
Thank you, Roger. I actually don't think so. What's interesting is I'd like to begin my comments by giving a spin to what Peter said about whether you're in the morning or evening, you may find something more liberating or confining. I think the complexity that stems from the way EU sanctions operate is that when one conducts due diligence, one needs to look not only at the designated persons, but also at persons that are owned or controlled by a designated person. And depending on whether you're in the morning of any one day or in the evening of any one day, that status, that information can change, because ownership structure can change within a matter of hours. And so many of the businesses, financial institutions, find it exceedingly difficult to keep abreast with all of the developments. And that's why, of course, many businesses rely on compliance software to provide them with the most accurate, up-to-date information on ownership control. And most of the software solutions that exist, and again, similarly to the United States, European Union does not request companies to use automated software, but there needs to be a risk-based approach to compliance. So most automated solution will capture for you the ownership angle of any one designated person. But when it comes to establishing whether there is existence of control, this is where things get really tricky. And this is where businesses need to really exercise judgment, look at every single situation and say, okay, do I have here a situation that meets any one of the criteria of control or not? And then add to that an extra level of complexity in that the way these criteria of control are interpreted in the EU member states differs from member state to member state. It certainly can differ. So not only are you checking the EU situation, you then also have to bear in mind, okay, which member states are the jurisdictions that have relevance for me? What does the regulator from those jurisdictions tell me I need to do? So that makes it, I think, more difficult in the EU.
Yeah. And if I may add a UK gloss to that, of course, you mentioned control, and the meaning of control is one of those areas where the UK, whilst not substantively deviating from the EU model that it used to operate, has nonetheless redefined control in a way that is certainly different words, and I think the general consensus is takes the concept a little bit broader. So certainly for those with a UK nexus, I would remind listeners to take a careful look at the new UK wording and think how that might operate differently to the previous assessments you might have made about control applying the previous EU law. Morag, I wondered if you might say a word about how insurers typically balance the need to manage and put some sensible constraints on the due diligence process, and in particular, I'd be interested to hear whether it varies according to the types of cover or the type of insurer that you are.
Of course. So as already been mentioned, it is tricky sometimes to know what our requirements are. So there's kind of some vague recommendations, and it's maybe you have to dig deeper into looking at enforcement actions and so on to get a real sense of what is expected of you as a company, and kind of see where others went wrong to make sure that your program doesn't do the same thing. So there is that element of not being 100% sure of what is enough, like the $100 million question, right? How much is enough to do what we need to do? And I would say that different lines of business, definitely we would apply a different view of how much due diligence there would be, because it has to be risk-based. We couldn't do a full suite review of every insured and every claimant. I'd never get anything else done, and never write any business, I think, because I'd be too slow in responding to people. So there has to be that risk-based feeling. You have to kind of see, well, which lines are more likely to cause us sanctions complexities, where should we focus our time? So for example, looking at marine cargo, there's so many moving parts, so many people involved, and it's moving. So, you know, you're shipping product X from A to B, stopping at destination C. We need to know all of that to see if any of those drop-offs or any of those elements might cause a sanctions risk to us. Another area, just by its very nature, would be kind of energy risks, especially if there's any Russian connection. There's sectoral sanctions in play there. So we have to be careful. There's so many elements maybe you don't know up front just looking at a risk. So we want to know if there are subcontractors, who they are. And it's digging into the details. It's finding out who the control and ownership is. And it's taking a stance that sometimes that's going to be hidden from you, because the entity who is designated is trying to hide the fact that they have these operations. So they're doing as much as they can to try and conceal their identity. So it's tough. On the flip side, there will be other lines of business that wouldn't be as complicated. Generally, a property risk is quite simple. It's a property in a certain location, and you can probably get your arms around that in an easier fashion. There's less going on with it, but that doesn't mean that we don't still want to have at least some review of that at some point. So it is, how much is enough, and that's a really tricky question.
Yeah, and I should say actually for the UK audience, there is, I mean, it's funny, there's quite a lot of new UK guidance, and sometimes the most useful bits appear in surprising places. And actually for the UK, the maritime advisory, might come on and look at maritime issues a bit later, but in the maritime guidance that Ofsted has issued, there's actually some quite useful general guidance on what they consider ownership and control to mean, and what they consider to be adequate due diligence. So I'd recommend looking at that, even if you want to know for reasons that are not related to maritime insurance. No, that's really helpful. Thank you. I wonder if we might look at a particular aspect of how to deal with the screening process and checking of designated persons. We're seeing increasingly sanctions authorities, and Peter, I think this is probably particularly true of OFAC in the US, being tough on businesses that fail to spot issues that they might have known from the information that they have available to them. And of course, insurers are commonly being large entities. They often have very large rafts of information in theory available to them. And I wonder if we might say a little bit about, firstly, that expectation, and in particular, how using all that data that an insurer might hold could square with data protection laws. And Nadia, given that the GDPR, I think, is increasingly a world leader in data protection, perhaps we might start with you.
Thank you, Roger. So naturally, I think you're absolutely right. In order to avoid commercial relationships with designated persons, businesses need to screen their customers, suppliers, agents against all kinds of lists, sanctions lists. And so the screening exercise involves access to massive amount of personal data. And if we were to use the data privacy terminology, we would call it data processing. And so when it comes to compliance with the requirements of privacy laws, you then subject the businesses across the globe are faced with yet another phenomenon in the European Union law, and that is the General Data Protection Regulation that applies extraterritorially. And also in a quite exceptional manner, because it really targets any business that in their operations looks to secure business from European customers. And sometimes anything as little as providing content on your web page in a national language of a specific EU member state may place you within the realm of the data privacy laws in the European Union. So it is a huge issue. And most of the companies that have a consolidated compliance program know how big an issue it is, because data privacy compliance is as burdensome as sanctions compliance. And depending on the categories of data you're having at your possession and the origins of lists you're screening against, you may be having to base your screening exercise, processing of the data, on different legal obligations in the GDPR. You may be looking at Article 6 if you're performing some form of screening. If you're screening against a certain list, you may be relying on Article 9 when you're screening against a non-EU list because of the public interest that is integral to compliance with sanctions generally. And in some industries, in fact, member states have specifically opined on the fact that some industries are so sensitive to fraud and international fraudulent transactions that they need to look at global lists and not just European lists. It's easier when your compliance function centers across the European Union sanctions list and you're an EU person, because then you can presumably rely on having to comply with EU sanctions regulations when you process your personal data. All in all, I think the regulators in the European Union have not fully pronounced themselves on the issue of correlation between one's sanctions obligations, compliance obligations, and data privacy obligations. Some member states have told privately companies that have reached out to them for advice, had said, look, to the extent to which there is an overarching obligation to comply with a certain law, because of the hierarchy of laws, we will not prosecute you for processing a certain amount of data. But be aware that we will be looking at how much data do you have, what is the nature of your data, how do you store it, how do you protect it, how do you access it, who has access to it, how do you transfer it, who is privy to that data. So it's never an easy ride, and it's an issue that I think brokers, insurance companies have to continue looking at and try to trace and even reach out to competent authorities if they have a particular issue, and not just sweep it under the rug thinking it will go away, because it won't. It's increasingly important.
Yeah, no, thank you. And I think that's absolutely right. And in the UK as well, I think this remains an unresolved issue. I hear reasonably regularly from banks and insurers that they consistently are worried about this because there has been no clear guidance on precisely where and the balance is to be struck. Peter, I'd be interested to hear from the US side on this, but also in particular whether the availability of of artificial intelligence has either offered a solution to the question of managing the large amounts of data, or conversely, has it impacted on the expectation of authorities as to how the data will be managed?
Well, without being too philosophical, it's this convergence of artificial intelligence, big data, and connectivity that's a tremendous challenge from a compliance perspective, because just as Nadi was explaining with respect to the data privacy, data protection issues in the EU, we've got these sort of two tracks and two trains hurtling forward. It's not entirely clear if they're moving at the same pace. On one set of tracks, you've got those trends, those themes that I've just mentioned. On the other, you've got the regulators. And one of the challenges is that, certainly regulators don't want to be behind technology, but they also may not want to be too far ahead of it, because there's this tension between stifling creativity and innovation while also keeping the sort of regulatory safety net in play. What we've seen is, in recent years, in the last 2-3 years, a concerted messaging effort by the US authorities to focus on things like cryptocurrency, focus on new technologies, and see how, the sort of timeless concepts of trade restrictions, which have been around, since Roger, your country was in charge of our country, see how these concepts apply in the sort of 21st century. And what we've also seen, particularly, there was actually a recent enforcement action, a couple recent enforcement actions targeting dealings in cryptocurrency, which were the first that I can recall that have been made public. And there was a sort of interesting line in one of them where OFAC basically says, look, we expect you to use the data that you gather. And that's really interesting. In a sense, right, it's sort of circular, right? Well, if you have data, surely you should use it. But question whether in a world of big data, that just how practical that is, or just what that means. I mean, I sympathize with my friend Morag. I mean, I can only imagine the amount of zeros and ones that come across your screen in any given day, and question whether any entity has the sort of bandwidth and literal bandwidth to actually make meaningful use of that tremendous flow of data. That's a huge challenge, and that's sort of the future.
Morag, I wonder if you were able to give us any insight into how you manage either the restrictions, imposition of data privacy rules, or the AI expectation and the regulatory demands.
Just to touch on both briefly, I guess, with the tension on the data privacy side, the GDPR, although it's kind of a revamp of existing data rules, it's still being embedded. It's still something I know a lot of companies are still refreshing and getting right. So things have been put in place, but people are looking back, saying, have we done it in the right way? Do we want to refresh things? And so ever moving. So I think it's a way down the line until we're looking at that disconnect between the sanctions and the data side. So definitely something on the horizon, but something I know we haven't necessarily drilled down into much yet, and I think that's quite common. Touching on the big data and just the volume of information that we have, the data's there, but yeah, how do you make it meaningful? It's gathered in so many different ways, it's stored in different ways, and how would you even know how to even attack that to pull out something that would be useful for a kind of a sanctions analysis point of view? So great to have the data, if only we can harness it. So again, it's something, I don't know if the insurance industry is necessarily cutting edge in these types of techniques. So yeah, it will be interesting to see how that pans out. And it's how do we harness that data that we would have.
If I can briefly comment back, because I found it very interesting, Morag, at the beginning of the presentation, you sort of laid out the terrain of different types.
Oh, have we just lost Nadia?
Sorry, Roger, can you hear me?
Yes, we can hear you
Okay.
again now.
Sorry, I was going to say that it was very interesting for me when you set out the framework for different business lines in the insurance sector and saying that each line comes with its own risk profile. So what's interesting for me for the purposes of GDPR compliance is one of the important elements of how you sort of build in your processing of personal data is where you pursue your legitimate interest in the processing. You actually have to balance them against the fundamental rights and freedoms of individuals involved. So if you use that as the basis for your risk-based approach, you can then look at your diverging business lines, where anything that has to do with personal type of insurance for, one's physical health, property would be perhaps exempt or subject to a different framework of analysis of your legitimate interests in the favor of processing in bigger volumes of data. On the other hand, you may look at a different business line in the insurance sector and say, well, here perhaps the fundamental rights and freedoms of individuals are not really encroached upon if we continue to process that data. And so I think it will always need to be a business line by business line approach that is necessary for you to be able to perform your duties under the contract, be it as an insurer or reinsurer or underwriter. And I think if you use that type of framework, that should help you at least concoct a roadmap and more importantly, at the very beginning, a mapping exercise of your data by business line and the purposes for which you use. I think that would be a starting point for anyone that wants to sort of integrate compliance in with the GDPR in the compliance with the sanctions, for instance.
Mm-hmm. Yeah. If I can just interrupt on an administrative point, and apologies for this, but if I could just draw your attention to the slide on the screen. If you're licensed in New Jersey or New York, I understand that you're asked please to write the code word in the chat box as it appears on the screen. So to anyone who's in New Jersey or New York, I hope that makes some sense to you. We might move on a little bit. I'm conscious that we've got 10 minutes left. One thing, Morag, I'd be interested to hear if this changes or your work on the compliance side internally. We're seeing, I think, in the UK and in the EU, and I think it's true in all of our jurisdictions, in fact, an increasing use of thematic sanctions. So we've got global Magnitsky sanctions now in the UK and the EU, as well as in the US. We've got anti-terrorism, cybercrime, criminal. In fact, the UK is just announcing this week, I think, a freestanding corruption regime to go alongside its human rights regime. Does the increasing use of thematic sanctions change the way you go about compliance, or does it not make a lot of difference whether they're geographically focused or thematically focused?
And I think in some extent it does. Traditionally, sanctions were geographical, so you just had a flag for certain countries, went on your way with everything else, and hoped that when something happened with one of those countries, somebody would know about it, could investigate it. But obviously, with a thematic sanction, it's not that simple. How can you have flags for these types of themes when they're so broad-reaching? So a lot of the time, it kind of comes down to awareness, chatting with the business, making sure they know what red flags might be, what things to look out for, what might be a little bit strange, and they should reach out to you. So obviously the screening process is happening in the background, and that would pick up entities and individuals that are on these thematic sanctions areas. But for actual activity and just that it doesn't quite feel right, you kind of need that buy-in from the business and their awareness and understanding of what the issues are, and it's trying to balance that going on.
Yeah, okay, thank you. So I think we might move on to another area now, and this is really just to focus on the fact that sanctions compliance is not all about screening, and indeed the restrictions as they apply to insurers go well beyond screening. So we see quite a lot of trade-related prohibitions that specifically relates to the provision of insurance or reinsurance. And to give some examples that we have here, for the provision of insurance related to import restrictions or export restrictions, provision of insurance to a targeted regime, or in relation to some other specific activities. And these really all go to the role of insurer as a gatekeeper. They're not targeting the insurance per se. They're an indirect way to use the function of insurance, but with the real targets elsewhere. I wonder if we might just have a word as to where that's going, and whether this function of insurance as gatekeeper in these areas poses any particular problems. Nadia, I don't know if you had any thoughts from the EU perspective.
Thank you, Roger. Well, I don't know if we can call insurance companies gatekeepers in that sense, but it is true that many of the EU sanctions affect insurers and brokers directly and their business. Not only because some of the EU sanctions directly prohibited provision of certain types of insurance services to certain regimes. This was the case with Syria. Certain types of sectoral sanctions caused that same prohibition to apply, and some sectoral sanctions, as Morag has been saying, for instance, in respect of exports of certain equipment to Russia, again, insurance cannot be provided. But it is also interesting how much knowledge is required from insurance companies in order to be able to comply with the obligations. Even if we take a very simplest basic form of EU sanctions of an asset freeze, I mean, the consequences for an insurance company are massive, because it applies or concerns the insurance businesses in two ways. First is that these asset freezes prohibit insurance companies from providing coverage to designated persons when this is a sort of a new contract, unless that type of coverage is considered to be a basic need, which may be very difficult to demonstrate. But then even when it comes to paying premiums to entities that are enjoying insurance, but which are subject to an asset freeze, insurance companies require licensure or licensing from the competent authorities in order to pay out the insurance premium. So you have a bulk of obligations that stems from an asset freeze. But then separately, you also see that when it comes to receiving payments from designated persons, you not only encounter obstacles to being able to have the money on account, also your ability to enjoy that money that originates from a designated person is restricted until you actually get a license to touch that money. So there is a handful of prohibitions that really make it quite an exercise for insurance companies.
Yeah. Peter, how do you see the use of insurance in the US in their indirect role as focusing on the function as a way to target other activities?
Insurance is an incredibly powerful point of leverage, and the US authorities know it. And it actually, in my view, ties into one of the points Morag just made, which was, I think, an incredibly important one, which is that when we talk about sanctions today, it's not just about a handful of flags. And it's not just about a few people's handfuls of individuals. It's about entities, it's about functions, it's about activities and conduct that may be sanctionable. And particularly when it comes to using insurance as a tool of leverage, that's an incredibly powerful tool, to go after some of those, let's call them sort of newer types of sanctions targets. So, for example, a large-scale pipeline project would be particularly susceptible to the need for it and all of its subcontractors and vendors to have insurance cover. The lifting of crude from a particular country would be something that would require significant insurance coverage. And what's so interesting about those two types of projects, for example, is that when you're looking at large-scale projects, it's not just a discussion about insurance, it has to be a discussion about reinsurance. And so you very quickly see how at sort of each part of the insurance life cycle or insurance ecosystem, you have a point of potential leverage. And the US authorities know that. And that's why what we've seen, especially with the rise of secondary sanctions, particularly starting from 2010 and really accelerating from then until today, we see lots of provisions targeting the provision of insurance and reinsurance in particular, because it is such a critical component of virtually every company's ability to function, that the US authorities know that, and they say, okay, thank you very much. You can't have this.
Morag, I wonder if we might hear from you on this. And the thing I'm particularly interested in from you is that whether the position of reinsurers is different from and perhaps more difficult than insurers, perhaps because they're a step further removed from the activities that underlying it are being targeted.
Absolutely. Yeah, as you said, with being a reinsurer, you just don't have that data at your fingertips. You don't have all the detail on the underlying insured. necessarily all the time. So you're making a decision in a different world of information, I guess. And there could be things, and if I go back to the example we spoke about, the Polish airplane, I very much doubt the reinsurer would have known the individual flight paths of the planes in the treaty that they're covering, and that there could be a potential that one of them might go down in Iran. That's probably not something that would have been part of their analysis when taking on the treaty as a whole. So suddenly a claim comes along and it has an Iranian element and they're a US reinsurer, and that's not what they signed up for. So it is, when you are the reinsurer, you are kind of you're working in more of a vacuum because you don't have necessarily all that detail of the underlying insured at your fingertips to make the decision.
So we've got just 2 or 3 minutes left. I did want to say, pick up very briefly on the conflicts of sanctions laws before we finish. And I think in view of the time, Morag, perhaps we might hear first from you. We've obviously got a conflict between EU and UK on the one hand and the US through the blocking regulations. The EU blocking regulation are now separately a UK equivalent. And also, I think, some complications with regard to Hong Kong between US expectations and local law expectations. I wonder if you might give a little bit of an indication as to how you're dealing with that, how insurers are finding that, and the problems that's throwing up.
Yeah, so the recent Hong Kong sanctions the US imposed in last August, I think, and it caused a conflict between the Chinese national security law, who it states that very much can't, I guess, be in cahoots with a foreign government and inflict sanctions upon the Hong Kong's special administration or the People's Republic of China. But many multinational companies in Hong Kong have an obligation to fulfill OFAC requirements. So there is that conflict. I know financial institutions are regulated by the Hong Kong Monetary Authority, did receive a circular basically telling them that the US sanctions, particularly for foreign financial institutions, the secondary sanctions don't have any standing in Hong Kong law. So the financial institutions were advised, I guess, to have a balanced approach. So rather than just point blank cutting all ties with anyone that might have hit the OFAC list, it's looking at a way to try and manage the local conflicts and maybe the US conflicts. And it's tricky, it's a hard one to navigate. It very much comes down on a risk by risk basis, and it comes down to each individual company because they're structured differently. Maybe they have US persons out in Hong Kong who can't be involved in something for a particular reason now. Maybe it's their management or their board. So it's and I think we've spoken about this before, there is no one size fits all. It's just an added complication into trying to fit how it works for your company and how best to manage that line between the two.
Yeah. Okay. Well, listen. I think in view of time, I think we're going to have to wrap it up there. We're up at 4 o'clock there. But thank you all very much. Thank you, Nadia, Peter, and Morag for joining and sharing your views. There are still some issues that we would have liked to cover, but we'll have to wait for another day. But thank you all very much to our audience for listening. And if you do have questions, obviously do feel free to reach out to any of the Dentons team individually. And with that, I will wrap up. Thank you very much.